The US dollar is under pressure, and President Donald Trump's latest comments may have just accelerated the fall. After a sharp sell-off in the dollar, President Trump said he does not believe the US currency has weakened excessively. That relaxed tone rattled global currency markets and fueled speculation that the US may now be comfortable with a weaker dollar. Following Trump's remarks, Bloomberg's dollar index fell as much as 1.2%, marking its biggest one-day drop since last year's tariff rollout. Dollar briefly touched its lowest level in nearly 4 years. According to Stephen Jen, founder of Eurozone SLJ Capital and creator of the famous dollar smile theory, this could mark the beginning of a new phase of dollar weakness. He believes the Trump administration is intentionally allowing the dollar to fall in order to support US exporters. Jen warned that many investors may not be prepared for a scenario where the US economy remains strong while the dollar weakens, something markets haven't experienced in decades. Trump himself said the weaker dollar is great for US businesses, reinforcing the view that the administration is prioritizing export competitiveness over currency strength. Global currencies reacted sharply. The euro and British pound jumped to their strongest levels since 2021. The Swiss franc had a high not seen since 2015. In Asia, the Malaysian ringgit and Taiwan dollar led gains against the greenback. Market strategists say Trump's indifference removes a psychological backstop for the dollar. When a president who could defend the currency appears unconcerned, investors begin to demand higher compensation for holding US assets. This comes amid growing concerns over US policy uncertainty, including tariff threats, pressure on the Federal Reserve's independence, and rising government debt. Some analysts warn that a prolonged dollar decline could be dangerous. The US is approaching $40 trillion in debt, and stability of the currency is crucial to attract buyers for long-term Treasury bonds. Goldman Sachs' Robert Kaplan noted that while a weaker dollar helps exports, currency stability becomes more important when debt levels are this high. Meanwhile, options markets are flashing warning signs. Demand for protection against further dollar weakness has risen to the highest level in months, suggesting investors are bracing for more downside. The big question now is whether this is just a temporary correction or the start of a longer-term decline in the world's most important currency.